May 8th, so Wednesday, is the highest crypto and blockchain industry. I'm Zu. Welcome to the data headlines sponsored by DeepCoin. Currently, the total market cap of stablecoin exceeded 160.5 billion as Bitcoin rebounded from 56,500 to over 62,000 in the past week. USDT's total market cap increased by about 500 million, currently exceeding 111 billion and ranking first. The runner-up USDC's market cap rose slightly by 200 million to 33.3 billion. Additionally, the decentralized stablecoin DAI ranks third with a market cap over 5.3 billion, calculated at Bitcoin's average price of 62,000 USDT and USDC together provided about 11.290 Bitcoins of purchasing power to the market. This also shows that market sentiment has warmed up somehow. However, just looking at USDC's market cap data, it fell by 400 million in the previous 2 days, indicating that funds were fleeing, so everybody needs to remain cautious about a short-term market rebound. Exchange net positions have been in negative territory since February 8th and maintained that for over 3 months. After a sharp drop a week ago, net positions started to show an obvious inflection point, indicating that the current market sentiment has slightly turned bullish. With bullish sentiment being relatively strong, however, the uptrend has not shown a clear and sustained amplification, so caution is needed as this bullish sentiment may be due to a short-term rebound from the bottom and positive stimuli, and the follow-through may not necessarily be strong enough, still requiring clear positive factors and capital inflows in the market. Recently, DeFi's TVL data rebounded from 88.5 billion to 91 billion with a peak of 93.4 billion, but then showed an obvious pullback. Currently, market sentiment and Bitcoin's trends are positively correlated, with on-chain staking funds rebounding slightly, but the overall trend remains sluggish. Looking at the performance over the past 30 days, among the top 10 public chains by TVL ranking, only Base Chain and Merlin Chain are growing, while the other 8 major chains are in a downtrend from the 7-day weekly data affected by Bitcoin's rebound from the bottom. All 10 major chains show a slight gains. However, in the past 24 hours, all 10 major chains have shown an overall downtrend. Therefore, short-term market sentiment remains not very optimistic. In China, the legal status of cryptocurrencies is quite complex. In 2013, the People's Bank of China issued a notice prohibiting financial institutions and payment institutions from engaging in virtual currency transactions and services, indicating that Bitcoin and other cryptocurrencies are not currencies in China, but commodities. Subsequently, the Chinese government has taken measures to strengthen supervision and crack down on cryptocurrencies. In 2017, rectifying and regulating Bitcoin exchanges, issuing the notice prohibiting financial institutions from participating in virtual currency transactions in 2019, banning virtual currencies mining in 2021 actually. However, the Chinese government has not completely banned individuals from holding and trading cryptocurrencies, with the Hong Kong Securities and Futures Commission approving spot Bitcoin and ethereum ETFs from 3 fund companies in April. Discussions have recently surfaced in various communities about China lifting the cryptocurrency ban within 3 months.
The speculation seems to have originated on the 26th of last month, as reported by cryptocurrency media outlet Coinpedia. It pointed out that with Hong Kong officially approving the trading of exchange-traded funds ETFs for major cryptocurrencies like Bitcoin and Ethereum, there could be a significant turning point in China's cryptocurrency policies. On the other hand, Coinpedia added that the introduction of Bitcoin spot ETFs in the United States in January of this year could also influence the decision-making of Chinese authorities. Twitter users suggest that if the ban is lifted, the cryptocurrency market could see an addition of over 400 million users within 3 months, causing the market to soar.
As the Hong Kong Securities and Futures Commission approved the listing of spot Bitcoin and Ethereum ETFs, this rumor seems to have become more plausible. As an international financial center, any wind blowing in Hong Kong's financial market can attract global attention. When the Hong Kong Securities and Futures Commission approved the listing of spot Bitcoin and Ethereum ETFs from 3 fund companies, many saw it as a signal of China's cryptocurrency policy relaxation. After all, Hong Kong and the mainland have close ties in the financial sector, and any changes in the Hong Kong market may influence policymaking on the mainland market. However, some experts have also stated that the approval of Hong Kong ETFs has no direct connection with the lifting of mainland's cryptocurrency ban. Hong Kong has autonomy in financial affairs, and its cryptocurrency policy is not entirely consistent with the mainland's. So, therefore, viewing the approval of Hong Kong ETFs as a precursor to the lifting of the mainland's cryptocurrency ban may be overly optimistic. What do you think? If the mainland does not open up cryptocurrency trading, the market frenzy is unmanageable. In 2021, the European Central Bank, the US Federal Reserve, the People's Bank of China, the Bank of Canada, or finance departments successfully issued policies with their rhetoric shifting from general and tentative warning statements about Bitcoin to harsh tones of strengthened regulation, as if in consultation with central banks around the world taking turns to warn about Bitcoin, with enough force to form a siege procedure. However, I've always felt that we shouldn't look at what they say, but rather what they do, starting with El Salvador's national Bitcoin frenzy in this battle for digital currencies. Governments have also quietly joined in, becoming a force that cannot be ignored. Recently, according to the latest data from the Bitcoin Treasurer's website, you can get a glimpse of the status of various governments in the Bitcoin world.
As expected, the U.S. government leads in Bitcoin holdings with a whopping 213,246 Bitcoins valued at $13.58 billion. These Bitcoins all stem from the outcomes of anti-crime efforts. Following closely behind the U.S. is China, holding 190,000 Bitcoins acquired from the 2020 Plus token Ponzi scheme. Surprisingly, the UK government also ranks among the top 3 holders of Bitcoins with 61,000 in its possession. However, in this battle for Bitcoin, the US-listed company MicroStrategy emerges as a significant player in the Bitcoin world, holding an astonishing 214,278 Bitcoins, more than any country's holdings.
In this battle for Bitcoin, MicroStrategy is truly the hidden tycoon not to be ignored. In comparison, even tech giants like Tesla pale in comparison. With Bitcoin holdings only 1/10 of MicroStrategy's Bitcoin holding strategy has undoubtedly brought tremendous confidence to the market, and has also shown more attention from investors to digital currencies. Though governments have simply been freeloading with holdings from illegal proceeds from the dark web black market, hacker attacks, and other incidents already making them crypto billionaires. Moreover, the US government's handling of these Bitcoins has always been closely watched by the market, with any wind potentially having a major impact on coin prices. Now governments and listed companies are joining this battle for digital currencies. Judging from their Bitcoin holdings, governments are and listed companies have all demonstrated strong strength and determination. In the decentralized system of cryptocurrencies, how much influence will politics have on this circle? With the US election approaching, Trump is likely to return to power, which has given some hope to people in the crypto circle. Many are hoping that if Trump takes office, he will be able to curb the SEC's behavior, regulating and imposing fines everywhere, as Trump had expressed a friendly attitude towards cryptocurrencies before taking office and even made money from the crypto circle by issuing his own NFTs. So, will Trump's return to office actually benefit the crypto industry? Under the watchful eye of the global financial market, a heated discussion about the future of cryptocurrencies is unfolding. And in this discussion, Standard Chartered Bank has undoubtedly dropped a bombshell.
In the latest report from Standard Chartered Bank, they believe that the dominant position of the U.S. economy is facing serious threats. In this context, investors are beginning to seek new safe havens, with cryptocurrencies and other alternative assets becoming their preferred choices. If Trump is reelected, the financial risks facing the U.S. could drive a surge in the cryptocurrency market, with Bitcoin's year-end price forecast reaching as high as $150,000. Standard Chartered Bank expects the Trump administration's second term to actively support Bitcoin and a broader range of digital assets through relaxed regulations and approval of U.S. spot ETFs. Standard Chartered Bank reiterates its year-end Bitcoin target of $150,000 and a target of $200,000 by the end of 2025.
For sure. Winter is over in terms of crypto. I called that a couple of months ago, and I stick by that today. Bitcoin's core use case is when there are concerns in the TradFi sector, We saw that a few months ago. It's partly on the back of that core use case around the TradFi sector as well, but also because Bitcoin miners should do better.
Many analysts have embraced the iron triangle doctrine that a US president seeking re-election needs to satisfy, namely high economic growth, high employment rates, and good performance in financial markets. So, at the recently concluded national conventions of the Democratic and Republican parties, what prescriptions did the challenger, Biden, and incumbent Trump, who prides himself on being the best at the economy, offer for the US economy mired in the pandemic quagmire? Will the iron triangle doctrine hold true this year? Actually, I don't think politicians' words need to be taken too seriously. What they say before taking office can be seen as campaign rhetoric. So don't forget the precedent set by SEC Chair Gary Gensler. Recently, the U.S. Securities and Exchange Commission (SEC) has once again flexed its sweeping leg move, bringing the cryptocurrency trading division of the well-known online broker Robinhood into its regulatory crosshairs. This is the SEC's third shot at the cryptocurrency sector this month, with the entire crypto industry seemingly shrouded in an atmosphere of tension and uncertainty. Dan Gallagher, Robinhood's chief legal officer, could hardly hide his disappointment upon receiving the notice, stating that Robinhood has always been working to cooperate with the SEC and seek regulatory clarity, including attempting to register as a special purpose broker-dealer. However, all these efforts seem to have failed to soften the SEC's hard stance, resulting instead in receiving this warning that could lead to litigation. And that's not all.
Vladimir Tenev, CEO of Robinhood, tweeted that the continuous crackdown by the SEC on the cryptocurrency industry is harming American businesses and consumers. He openly criticized the SEC's regulatory actions and vowed that, if necessary, Robinhood would use all resources to fight the SEC in court. Following the SEC's issuance of Wells notices to several companies in the cryptocurrency space, SEC Chairman Gary Gensler once again reiterated that many cryptocurrencies are considered securities.
Congress's purpose in enacting the securities laws was to regulate investments in whatever form they are made and by whatever name they are called. That's why Congress's definition of securities includes more than 30 items, such as stocks, bonds, notes, and something called investment contracts. An investment contract exists when you invest money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. Intermediaries for investment contracts, whether they're exchanges, brokers, dealers, clearinghouses, they need to comply with the securities laws and register with the Securities and Exchange Commission.
Although the SEC's crackdown on cryptocurrencies may have an adverse short-term impact on token prices, data shows that cryptocurrencies previously labeled as securities by the SEC have not disappointed investors in their performance from last year to this year. So, take the well-known Solana public chain as an example, as SOL, which was greatly affected by the FTX exchange's bankruptcy and crash. After the plunge during the bear market, it has rebounded strongly from 22 in early May last year to 155 now, a staggering 700% gain, thanks to the development of the ecosystem. Robinhood's stock price did not see a significant decline after receiving the Wells notice, but instead rebounded slightly in after-hours trading. The market seems to have become somewhat immune to the SEC regulatory actions.
Tesla has proposed to launch driverless taxis in China. In response, the Chinese government may initially support its testing and demonstration domestically, but has not yet fully approved its full self-driving FSD system for comprehensive deployment in China. Data monitoring shows that 168 asset management companies have disclosed holdings of belied EBIT in their submitted 13F filings, with the two largest located in Hong Kong. With only 3 weeks until the securities regulator was forced to make a decision, Grayscale submitted a withdrawal of its application for the Ethereum ETH Futures Exchange Traded Fund ETF to the U.S. Securities and Exchange Commission on May 7th. Vitalik Buterin has proposed an alternative to EIP 3074 called EIP 7702. This alternative aims to provide smart contract capabilities for signature accounts by adding new transaction types, achieving similar effects to EIP 3074. Decentralized cloud computing infrastructure project Aether announced on the X platform that it will conduct an airdrop to the Azuki NFT community. Users need to connect their wallets to the Aether Cloud Drop platform to check if they are eligible to receive badges.
Okay, that's the main content of today's program. If you find value in our channel, please feel free to share it, follow us, or become a member by clicking the top right corner to see our membership benefits. Our channel focuses on curating valuable news in the crypto, blockchain, and mining industry. So Monday to Friday, we cover news and information, while Saturday and Sunday, we feature in-depth special reports. You can access our wealth password from Monday to Friday, as well as industry articles from our special contributors. Let's slowly get rich together. See you tomorrow.